In this video, traders, we're going to look at how to change the way that you look at support and resistance. Stay tuned. Hey traders, a very warm welcome to you. Okay, so support and resistance. I'm gonna take the assumption that you know what support and resistance is. If you don't, go and check out other videos that I've done on support and resistance and kind of getting an idea on how to draw stuff. But I just wanted to touch in this video about how we need to reframe our mind when we're thinking about support and resistance. Too many people look at support and resistance as a definite line in the sand. Thou shalt not cross this kind of thin price line that's about one tick wide. Now, to me, that's flawed thinking. Number one, often price will break through, it will pause just before, it will, the momentum will carry it through just by the sheer point of momentum. The fact that someone will be sitting there with a massive sell order right on that button, it does happen from time to time, but it's generally going to be an area where people are wanting to do business. So the first thing you need to do is to look at it at like a zone or like zones. So if we have a key level down here and a lot of things have gone on here, rather than as being fixed with it, we would say something like, if I can find my pen, let's go with the red pen, perfect. Rather than having a fixed line, we would say, okay, in this case, we've broken through it a few times. We've got a zone. We look at it as if it's a zone. And a great kind of analogy I read on an article is it's almost like a trampoline. When price is pushing to it, it sometimes stretches a little bit. It never well, it could break if it's heavy enough, and we'll get to that in a second. But generally, it might come through, it'll bounce back up, it might sit on it for a bit. That's the way to look at it, rather than just a solid brick wall. That's the way to kind of frame it in your mind, and it becomes a little bit easier to frame your trade then, because you can say, okay, hey, this is an area of support, it's an area of resistance, and an easy way of doing that is to just draw that on with a rectangle function on your chart. So rather than just the lines which we all use, either rectangle function, just shade it. That's very, very visually easy to see. Then you can see it as a zone or a couple of lines or whatever it is, or a thick line. Sometimes you can adjust the thickness so it's quite wide. Just something so that you don't think of it so much as a line, because often visually we see a price that maybe has gone through that initial part, but really it's only within the zone. But in our mind we're thinking, hey, it's broken. We need to look at it in a little bit, give it a bit more of a broader feel to it. So looking at zones is the first kind of hack for you, if you like. The next one is to look at it as a probability. It's not certainty it's going to bounce there. It's nothing more than, hey, it's done it before. It's got a better chance of bouncing here. In the case of support, obviously, flip it around for resistance. It's got a better chance of bouncing here than it has anywhere else in the vicinity, purely because of history. Now, does that mean, if you've got a dice, are you definitely going to throw an even number? No, it doesn't, but the odds are what they are. Now, it just means you've got a high probability. That's a bad analogy with the dice, obviously, because you're 1 to 6, but you kind of get the point. The point is, hey, it just need to look at it like that. Rather than a fixed thing, it will bounce or it won't. It's just a likely thing to happen based on previous price action. So how do we draw it, and what do we kind of do, and how do we stop ourselves getting so much information, so many lines on our chart that it just becomes ridiculous? That's the major theme of this, guys. I've made that mistake, and I see people making that mistake as well, is having too many on this. So what you do is you look where price is now, and you draw where is the next major level. I'm emphasizing major level because you don't want little tiny levels where it's paused or maybe has a couple of kisses. You want solid, stands out, smacks you right in the face. Wow, that's a proper key level there. That's a proper solid floor, a proper solid ceiling. Where's my zone? Wow, it's a decent sized zone there. It may be 20 ticks wide, but it's thick and the price hasn't gone through it for the past 10 weeks. On my low here, look at the that's what you're doing. So you're looking where current price is. You're not looking way away. You don't need to do that. You need to look where the next major levels are above and below price. Forget about minor ones, look at the major. And then you need to look and say, hey, how has price reacted prior? In other words, a lot of things to look at here, guys. How many times has it tagged the level? What has it done? Has it traded through the level, held for a bit, then came back through? So in this zone, has it kind of done a little bit of work, you know, below the zone and pushed back up? Has it probed below it? How has it fared? Because that is going to give you some data as to how potentially strong that trampoline is, for want of a better analogy. And ultimately, whether you're going to take it, whether you can use a wider stop, how you're going to frame your trade. You want to see exactly whether candles have closed under it, whether candles have just done a little wick through it, a little tail through it. How has it behaved? And then you can color code that accordingly. You can have a key. You can say, hey, a really dark red means that it's, you know, really very solid and it's very structured. We've hardly had much movement. It's very, very tight. It's got a long time back. You know, maybe a lighter red means that, you know, we kind of bounce around that level, but we've had some kind of grubby tails through. We broke through it like a few days before, so it's been breached a few times for quite a long time before it's come back into play. And grade it differently so that visually you know, hey, price is coming up to that massive level. I'm already sure it will be prudent now to perhaps cover some position and see how we get on, because this is a solid level of support. And the probability is quite high on this one because of all the parameters are indicating that history has shown this has held quite nicely. And if it does break, I think it's going to absolutely crack through the floor. And I don't want to be kind of, you know, in the wrong side of this if you're flipping it on its head in terms of what your position was. All right, number 3, switch chart styles as needed. So sometimes it's not very obvious. Sometimes you've got candles, and especially if you're a newer trader, you've got your candles and it just looks so busy and you can't pick it out. If you need to flip to a bar, flip to a bar. If you need to flip to a line chart, just so you can visually see where it is and say, actually, yeah, I can visually see it now. Because sometimes, you know, especially with bars and candles, you're seeing like wicks, you're seeing tails, you're seeing stuff all over the place, and it's not immediately obvious sometimes that, hey, it's just a couple of wicks that have burst through. It's not actually a genuine solid, you know, trade through and close above. It's just those wicks and the little tiny flurries through that kind of go, oh yes, we're going to jump, and then it comes back down again. So if you need to switch and just flip the different chart just to get a better visual representation, then do it. There's no need to kind of worry about if you can't see it or not. Flick chart styles. And the main thing again, guys, one thing to just repeat is, hey, just only include the major levels. It's very tempting to go, oh, another line there, and drawing a line here and a zone here. And before you know it, your chart is just so busy you can't make clear decisions. You need to just, all you're trying to do is frame the day, frame the next week, frame the month. There are my major levels. How am I going to use them to trade? Am I going to trade off them? Am I going to use them as targets? Am I going to wait to see how price responds to them? These are the main cornerstones and foundations of your trading. So you want to have as few as possible, but the best and thickest and most likely ones that something that's going to happen at possible, where people are wanting to do business and you want to do business, whether that is waiting for the break, whether that is fading a probe to it. All right, guys, different ways of looking at support and resistance, zones, probability, little strategy for drawing them on your chart. See you next one. Take care. Bye-bye.